Hey everyone, welcome back to Corporate Dakota. Today we're diving into Columbia ETF Trust semi-annual shareholder reports. It's like peeking behind the curtain to see how well these investment funds are really performing and which ones are just, well, coasting. Get ready because there might be one or two fund names you recognize in here. And before we jump in, if you're into getting clear explanations of complicated corporate stuff, make sure to subscribe. We also have a Discord community linked in the description where you can chat and collaborate with other finance enthusiasts. Join us, pull a bit of the corporate stuff, make sure to subscribe. We also have a Discord community linked in the description where you can chat and collaborate with other finance enthusiasts. Join us. All right, first up, we're looking at the Columbia International Equity Income ETF, ticker symbol NEQ. This fund focuses on international stocks to generate income. For a hypothetical $10,000 investment, you pay about $23 in costs. It's kind of like a toll fee for letting them manage your money. The fund's total net assets are roughly $33 million. This isn't huge, but let's see how they are managing those millions. They hold about 101 different investments, a significant portfolio turnover rate of 44%. Their top holdings include companies like Iberdrola SA, Siemens AG, and Shell plc. Breaking it down by sectors, financials take up almost 25% and industrials even more at closer percent 27, which means it is dependent on the global economy and those sectors to perform. Top countries in their portfolio is Japan and Germany. Before we move to the next form, it's worth noting that Columbia Management Investment Advisors are investment managers to the funds. Okay, next we're cracking open the Columbia US Equity Income ETF, ticker symbol EQ. This fund is all about US stocks that generate income. Based on a hypothetical $10,000 investment, the cost is a much lower 17 compared to the international fund. This fund is significantly larger, with net assets of over $182 million. They also have 101 holdings in the portfolio, just like the INEQ. Their portfolio turnover is once Ed2, which is lower and indicates they are not trading as much. Looking at their top holdings, we see familiar names like Coca-Cola, ExxonMobil, and Home Depot. These are big established US companies, and their asset allocation shows almost all in common stocks. Sector allocation is mainly financials and information technology. Again, same names here, Columbia Management Investment Advisors, LLC are listed to be the investment manager to the fund. Now let's decode the Columbia Diversified Fixed Income Allocation ETF ticker dial. This one puts your money into a mix of different fixed income investments. For a hypothetical $10,000 investment, the cost is about $14. This fund holds about 346 million difference in net assets, a whopping 571 different holdings, which is a lot, and their portfolio has a high turnover rate of close to 100%. You might wonder about the high transactions, but they mention that it's excluding securities, so the turnover rate should be 11%. Scroll Uniform Mortgage-Backed Security TBA Colon 0555 Series A Report Pro Scroll. Their top holdings are made up of mortgage-backed securities and US Treasury bills. Their asset allocation puts the money in commercial bonds and a good portion, close to a third, in foreign government obligations. A good portion of their investments are rated BB. Before people jump the gun on ratings being subjective and unreliable, they have a note here to help shed light on it. Credit quality ratings assigned by rating agency are subjective opinions. And here we go again. Columbia Management Investment Advisors are managing this fund. Lots of obligations here. Next on the list, we have the Columbia Multi-Sector Municipal Income ETF, ticker MUST. This focuses on municipal bonds, which are debt issued by cities and states with a cost close to $11. This one is $400 million, holding at least 540 V2 positions. They don't seem to trade the portfolio very much, with only 8% turnaround in positions. Most states they seem to be in are New York and Texas, not as diversified compared to Dial holdings before. Their credit quality allocation is mostly a AAA, which is safer. Just in case things go wrong, they did include their handy ratings descriptions. You guessed it, Columbia Management Investment Advisors are also in charge. Here's the Columbia Research Enhanced Core ETF, ticker RESs, a big fund with enhanced core aims at broad US market exposure. This is the biggest so far, holding almost $2.5 billion. Its portfolio is relatively small with 367 names. Turnover is also small at just 19%. It costs about $7. Their top holdings include the usual tech big names, Apple, Microsoft, etc. Looking at their asset allocation, it seems pretty concentrated in common stocks, but their information technology sector occupies the most percentages. What do we have here? Columbia Management Investment Advisors running the show, also heha. And finally, the Columbia Research Enhanced Value ETF, ticker AVIAs. Enhanced value goes for stocks that look undervalued compared to their actual worth. And based on a $10,000 investment, it would cost about $9. This fund has $68 million in assets, but only about 317 holdings. The turnover is a low 27%. The biggest single positions here are JP Morgan Chase, Philip Morris International, and Cisco Systems, each making up around 5% of holdings. So let's take a look at total expenses. Oh boy, asset allocation, money market, or equity. Looks like these funds are doing well this year, and sector allocation is in the same manner, mostly, which are the signs of a low-cost, passively managed fund. I have no idea what that one does. This is just what the form is. What's that? Oh, more to go? Okay, Columbia Short Duration Bond ETF, the fund for the period of November 1, 2024 to April 30, 2025. This fund is a tiny $54 with 575 holdings. This ETF is not a big seller in name. The portfolio turnover over 105%. Portfolio turnover as 15%. Portfolio turnover as of the end of the period, excluding transactions in to be announced securities. Let's take a look at their top holdings. Looks the portfolio is filled with US Treasury bill. Uniform mortgage-backed security, TBA again. Money market funds look to be just 5.8%. Now let's dig into the main course. Treasury bills versus residential. Bond ratings on fund holdings are very low, mostly in the BBB rating. Keep in mind there is a side warning that these are subjective opinions. Can you believe it? Who is in charge? Not Columbus, but Columbia Management. The semi-annual short report, Columbia Select Technology ETF, the fund for the period of November 1, 2024 to April 30, 2025 with 33 million. This fund is kind of medium, not too small, not too big at 33 million with 36 positions. This is a relatively small amount of positions for the size, so it makes sense the portfolio is only 58%. Their top holdings, Nvidia and Microsoft. Again, we see most sector focused on industrial and consumer discretionary. Finally, the subcategory, it's in IT services and communications equipment. Lastly, Columbia Management Investment Advisors FOIs tier. Now that we've decoded these reports, what are our thoughts? For years, Columbia, as other funds, have been pretty standard. Most of the profits have come from the last few years because more people have been investing in the stock market overall in general due to the Fed rates. What's clear is they're mostly focusing on tech and not following a diversified portfolio strategy. This can be seen as a weakness because this will cause it to fluctuate more and be risky. On the other hand, some of the higher management fees compared to other passively managed funds are not being justified, for example, in semiconductors. Alright, that's our breakdown of Columbia ETF Trust I semi-annual shareholder reports. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.